Hi everyone, and welcome to the proptrade.com. Can you hear me? My headset sounds a bit strange. Doesn't sound like I can hear myself, which is always a little bit unsettling. Let's have a quick check. 5, 4, 3, 2, 1. It says looks like it's okay. Input, output looks okay. I don't think anybody's here, but do join me. And let's have a look at the markets today. It's been quite a busy day for Tuesday. Major news this morning was the RBA interest rate announcement. No surprise there. Came in at 3.6%, as was expected. No change from the RBA. The statement earlier this morning was sort of very much in line with what markets were expecting. If we look at the Aussie, that's the copy we were short from last night. That's a winning trade from last night. We were half out of that. If we just go backwards, sorry, let's have a look at the Aussie crosses. This morning we got obviously the JOLTS number of 66.20 is where we trade for the Aussie here. You can see here the Aussie strongly up this morning. Big volatility on the announcement through 66 on the European Open here. This is the Heiken Ashi and the 50 periods exponential moving average, and this is the VWAP for the 3-minute time with the orange line here. So we've been a strong trend since yesterday morning, really, here in the hourly chart. You see we've been moving up quite significantly. So Aussie bid here against the dollar, Aussie against the yen, also to the upside today. There's the data on the this morning, and then the news on the open. We moved Aussie quite violently, as you can see here, but we've recovered from that and we've tended to move. So the Aussies bid following that inline expectation. Chinese PMI is a little bit better than expected this morning, both manufacturing and services. 52.3 for the casing. That's the private sector, if you can call that, in China this morning. So a little bit better than expected. Down from last month though, but still looking forward. UK data was better this morning as well. GDP 1.4% from an expected decline to 1.2%. Last quarter was also upgraded to 1.7%. So finally some positive data for the Chancellor and the embattled Prime Minister Keir Starmer. The Labour parties have got their annual conference this week in Liverpool, and Keir Starmer is speaking to his troops, or speaking to his troops as I speak now, to be honest. So let's see if that changes anything. Major upheaval in the polls in the United Kingdom. So GDP data finally looking a bit better. Remember, Rachel Reeves has pushed back at the budget to give her as much time as possible, or the economy as much time as possible, to try and add some more of these better numbers. But as far as the perception in Joe Public, it doesn't seem to be changing things much. As you can see here, business investment better than expected, revised higher last month, and not as bad as expected this quarter as well. So things looking a bit of green shoots there for the United Kingdom. Sterling, look at the Aussie against Sterling. Sterling's been under pressure, and again, this is a stronger Aussie, weaker Sterling across the board here. So Sterling down against the Aussie, the stronger Aussie on the confirmation of no rate change from the RBA this morning. German retail sales was a bit weaker than expected. CPI in France continued to look a bit sticky. Unemployment a little bit worse in Germany. So again, the European data is a little bit stickier than it is here in the UK at the moment. And German inflation, again, this idea that we've seen across many nations, the stickiness of the unemployment number, the CPI data. So inflation 2.4% from 2.2% last time, and 2.3% was expected. So it's crept up again this morning. Right, the main data we're looking for is the JOLTS openings. Remember, we were 9 million, 11 million. I think what little picture haven't I of where did I downloaded something? I think I've used it on one of the. There we are. Screenshot from what's my other page? I I'll just bring that down. You can see this is the JOLTS numbers here. We've a bigger screenshot from Forex Factory. You can see the, way up here, 11 million from the recovery of the COVID crisis, and we've sunk quite significantly, sunken 9 million last year, downward all of 2024. 25 we came in the 8 million. So all this talk about potential recession in the US and tighter jobs market, the immigration clampdown in the US by the Trump administration started to take its bite on the jobs market, on the volume of the jobs market, and so openings coming down, and 7.8 million last time. So today we are expected 7.19, so a little tick up. So have we bottomed out? Are we going to go under 7 million? We'll see later. This data was key. Certainly, as I'm sure you all remember, Janet Yellen was the member of I think it was the San Francisco Fed when she created this jobs openings number, the JOLTS number. It also captures churn, i.e. the number of people that move from job to job as well. So it shows the relative health of the jobs market. If people can move from jobs to job quite quickly, that seems to have slowed down. So this mantra we seem to have now from the Fed about focusing on jobs, and the fact that hiring seems to have squeezed completely, slowed down very significantly. However, we haven't taken the next step, which is what the bulls are saying. The US economy is remaining very robust. It's very resilient, and companies are not letting people go. So the rate of sackings hasn't started to pick up, and also the rate of hiring has obviously slowed down very significantly. So we're at this pivot point now. Are we going to go down the road where we can see sackings rising, and that will raise this spectre of more a potential recession if the inflation rate continues to hold up, and the impact of tariffs starts to feed through to the consumers, to businesses seem to absorb that cost at the moment. Obviously, the administration was saying, well, there's no inflation. Let's cut rates very aggressively, 100 basis points, 150 basis points as quickly as possible. Current Fed, that's not happening. Obviously, a month further down the line, we get to the end of October. We've had another Fed meeting. We will have cut rates by then, and we'll probably have a closer handle on who's going to be the next Fed chair, whoever it is, to replace Jay Powell is going to be much more in line with the administration. They're definitely going to see to that. So, hence the rally we've seen in the stock market. So, let's see what it looks like. Also, we got the consumer confidence, key piece of data as well. The consumer has been remarkably resilient through all of this, and we are under 100, but we're still relatively strong number, that 96. We'll see what that looks like. Remember last week it held up a wee bit better than expected as well. And then speech from Trump. I don't know whether I was looking at you. I was speaking to everybody yesterday, wasn't I? I'm not sure what that is about tonight, to be honest. I'm sure it's an announcement about the farmers, whether it's further announcement about his expected peace deal between Gaza, between Hamas and Israel. But we'll find out shortly, won't we? So markets are waiting for that as well. So we've still got a few minutes to go, a minute before the date. Let's go back to the main dollar crosses. Look at the euro. So if we've got the USD, euro. Come back to this. I'm going to try and take the benefit of this. The 5-minute trade here on with our Heikin-Ashi candles. Remember what Heikin-Ashi candle shows? That it's the sort of average of the last two candles, so it's perhaps not as actually. Let's go where we are. The VWAP. There we are. We're under VWAP, or around about VWAP here at 117.35. Very big spread there. What's all that about? On our euro position, there's chaps. There we are. That looks 30. That's 3 pips. Something's going on with the spread there on that one. Let's have a look at what that looks like. On our Bollinger Band sub. That's 5 minutes as well. No, I don't know how the spread's that big. But anyway, the data must have come with having moved up in the last 20 minutes from, is that the low of the day? I'm not quite sure. I'm bringing up my charts today. It's round about the low of the day, isn't it? We went into here at 17.16. We are moving back down to test that. So that looks like that's going to get breached, or certainly at least get tested on this data there. 17.13 for the sake of round numbers. It's 17.12 in fact. Are we going to test that low? First low is this area here, so 17.20 on the date. Let's have a look what the data has shown us. PMIs. I missed that as well. That's weaker than expected. The Chicago number. Let's have a look. So it's got all. And obviously, the other things happening today. Obviously, those that haven't closed their account for September, for the third quarter as well. Remember, it's not just the month. Have to do that today. The books certainly close today. Select all. Let's make the 2 and 3 ball one apply. Let's have a look at just today. There's enough stuff going on later on today. We've missed with the PMIs, and consumer confidence has slipped again, 92.4. So that's quite a significant decline from last month, where we were at 97.4. And interestingly, job openings have moved back up, 7.227 million. So again, it would argue that the argument about these rapid rate cuts is sort of being somewhat diminishing. We are still seeing quite a resilient US jobs market, but now are the people around to fill these vacancies? So we've jumped up about 30,000 from expectations. So we were 120 last month again. Better than expect. That's been revised up another 20,000. So we've gone to 7.2 million, and now we're 7.22 million. Just take round up numbers for the jobs openings numbers. So we'll see what the private payrolls look like tomorrow, and then obviously the key official Bureau of Labour suggested the non-farm payrolls on Friday. 50,000 numbers have been expected for there, but job openings better than expected. Consumer confidence weaker than expected. Chicago PMIs again weaker than expected. It's expected to actually move up quite significantly. It's actually moved down quite significantly. So a mixed bag there for US economic data. The euro has moved lower. The dollar's moved up on that, on our expectations that the pressure to cut rates might have diminished a wee bit. We'll see what the futures market are looking like. That will have a look at CME data in a minute. So 117.28, 117.30 is where we're back to. We didn't get back to test these lows from 3 o'clock, or indeed these lows ahead of the data here at whatever time that was, half an hour ago, 2:30 or 14:25 my time here as well. So dollars lifted a little bit on that number. Sterling certainly been under pressure today, 134. So look at this one. Look at sterling today. Pressured, came back on Friday, went sideways yesterday, and we're still sort of in this sideways channel very much here on this hourly chart. But under the key, when I say pressure, I mean it's under the key psychological 135, and we have been since Thursday last week. So 135 is still a bit of a stretch away for sterling, but we're off the lows from Friday when we were down at 133.25 to the downside. So closing out, obviously it's all, as I said, as I've been saying for a few days now, obviously it's the end of the month, end of the quarter as well today. So positions being closed out. Stock markets in the US have been open for 30 minutes, and we had a positive day yesterday. We're in the red, or we were in the red when we opened. Nasdaq's down 15 points at the moment. S&P is right back to where it opened lower, and it's back up to that 66.60 cash close we saw yesterday. Sorry, I'm talking about that, and I haven't got the indices on. There we are. So there's the Dow 6657 here on our derivative market. So say the cash market closed at 6,660, just still at these record high levels. So the bounce back, the sell-off we saw last week has been bought back, and so we had an up day yesterday, and we're just bang on that 6,660. And the cash market, the derivative here is a bit lower at 6,653. So we're still on the upside. Same with the Dow. The Dow is literally up 4 points, so flat on the day into the month end. May be some action, but as you can see here, the Dow's a nice, steady away, if you like. We're consolidating at highs, at all-time highs. We're above the 20-day moving average. It's held on that last test we had last week at 45,800. And now the 20-day is now at 45,900, so approaching 46,000, the 20-day moving average on the Dow, mid of the Bollinger Band. Nothing to panic about. We're still tracking higher. Valuations, forward valuations, very strong, very rich, but there's no big sign of a major sell-off. It probably needs a bit of a pullback, like we had here towards the end of July into the beginning of August, but we've recovered from that and moved up. So steady away the Dow. The S&P 500 we have a look at, and the Nasdaq 24,500 has been recovered today. And again, similar to the Dow, more testing of the 20-day moving average. Remember the Nasdaq, and particularly the Nasdaq 100, the top 100 tech companies, much more vulnerable to interest rate expectations, short-term interest rate expectations than some of the bigger industrial companies. But at the moment, we're still moving higher, and we're just shy of all-time highs again. So we're holding up. And the key panic button is at 24,175 at the 20-day moving average for the Nasdaq. MACD here, sorry, not MACD, it's the stochastics, rolled over from the top here. So this would have been short from last week, as we mentioned last week. I'm sure we did, didn't we, on as that. So looking to push into a potential overbought area. We've yet to get in there since June, but perhaps a turn up here. My system yesterday triggered a short on all of the three major US stock markets, so I didn't publish it last night. I might have a look at it, see what it looks like today. Just a tentative short here. Remember, obviously, as we come to the end of the third quarter, the earnings season then starts to loom in analysts' windows and CEOs' windows and CFOs' windows. Starts in a couple of weeks' time as well. Obviously, with the big banks, and the second quarter was much better than expected, and third quarter still looked okay. The impact of the tariffs doesn't seem to be as negative as many were thinking. So stock markets continue to look ahead, as they always do, 6 months, 12 months, 18 months to a more benign Fed, lower interest rates coming quicker once, as the administration say, once Jay Powell's out of the way, but he's not going anywhere until May. So, and the Steve Mirren's appointment is only temporary, but he's still obviously a member of the government when he goes back. So his demand for 50 basis points is not going to go away if this data remains as it is. But we need to see a much tightening up, a much weaker jobs market, and a much hotter inflation data for things to swing either way from where we are at the moment. Okay, so they're the two obviously main focuses of the Fed and most central banks. I say a rise in interest in inflation, as Powell has suggested, because of the tariffs. How much that feeds through, how much it is a one-time effect, and how much of it actually exists. And that's all the conundrums that that's being kicked around in markets, anticipation of what may happen in the future. So just talking about the future, if we just look at what the CME is looking like at the moment for the next for the last two meetings of 2025. I'll bring up the CME thing. Obviously, the other major issue as we're at the end of the month is obviously this shutdown of the US government. Markets tend to sort of blow that off. It makes a lot of noise, and they usually get to some sort of deal at some point. But it looks like the Democrats are standing firm, and Trump is standing firm. So there's not going to be no deal. So there's going to be some parts of the US government potentially shutting down from tomorrow. So whether we actually get a real Bureau of Labour Statistics release on Friday, obviously all the numbers and all the counting's being done. There'll be some the last few days some double checking going on, but whether that's actually going to take place on Friday, we shall see over the next few hours. But as far as the the speculators are concerned, over on the futures market, we still got a 92.5% chance of a 25 basis cut at the October meeting. So it's not the December meeting. No, it's the October. The December meeting has a 72% chance of 50 basis points. That's interesting, and a 26% chance of a only 25 basis point cut. So that's coming down. As you can see, it's been it was higher yesterday. It's come down a bit as the data's softened a wee bit. So a 72% chance of by December of the 225 basis point cuts going through. Interestingly, 1.6% chance of no change from where we are now by December. So no more rate cuts. By the end of the year, there's only got a 1.6% chance, according to the CME group and their probabilities for the next two Fed meetings. According to the options in the futures market, where the punters are putting their orders. So anyway, back to today. Nasdaq, I say, is let's look at the hourly chart, sort of benign into month end a wee bit. This is yesterday's opening candle. Sorry, that was the closing candle for Europe. We were down on Nasdaq. We've been in the under half of the Bollinger Band overnight European session, and also this morning's session. Just ahead of open, we did pop a bit higher, but we've moved lower since. As I say, the cash session still remains quite firmly in the red on the Nasdaq. We're now down 0.35 of 1% on the Nasdaq. The Dow, it's been higher. Now it's just reversed. The Dow sort of pivoted around the yesterday's open. We're at 46,275 on the cash market. 46,265 here on our derivative markets. We've moved down a wee bit. Elsewhere, we had that big pop for Bitcoin yesterday through the key here yesterday on the US Open. Sorry, it was this one, wasn't it? US Open yesterday, the 2 o'clock, 3 o'clock, the 2 o'clock candle took us through the key 112,000 yesterday. So from quite a solid base. If we go up to the 4 hour and the higher time frame, actually start with the daily, you can see that big move down we had last week. Solidish base here at the 109,000, 108,000 floor that we'd seen here at the end of August, beginning of September. End of September also held this 109 level, and then a big pop yesterday that took us through 112. And the key thing was the fact we closed the day on this daily candle just, not greatly, but just into the upper half of the Bollinger Band over the 20-day moving average. We've given that back today so far, but can this move higher be held? That's the key thing I'd be looking for. Key to see that 112 holds. We're currently 113,000, so that would look positive to me going forward. And then, all-time highs 125,000, 124,000. That far from out of sight, aren't they? So a holding of 112,000 is key for me as a sort of an optimist on the Bitcoin market, to be honest. So there's that base a bit more clearly in the 4 hour time frame. So the base there at 109,000, 108,000 level since last week, and up we went certainly through 112, and then we peaked out. What was that last night? In fact, so it is a down day so far. A little tweezer top on that rally up there, so that's been shorted there. This strategy would have gone, absolutely. This 4 hour strategy would have been short there, $114,014, and it's in the money. Oh, actually, no, it's not on that. It was there. Yeah, there we are on that one. You could have added further there. First target made down there, 111,500. But stop loss would have dragged it down yet? Yeah, my stop loss would be there now, 114,045. 2 candles behind. See where we go. So that's short on that 4-hour time frame using this stochastic and Bollinger Band strategy. For Bitcoin now on the 4-hour time frame, guys, I say if there's anything a particular asset you want to have a look at, it might be different than we normally have a look at. Let me know. Stick it in the questions. We'll have a look at it. Otherwise, I'll just stick to the majors, the ones I trade and have a look at. Energy. We haven't looked at oil for a while, but we had that OPEC announcement yesterday about production, and we've had a significant weaker move down for the oil market. WTI now at 62.70 and Brent at 66.50. So that up move we'd seen for the oil market last week topped out here. You see on Friday we went to 66.50 and significant down day yesterday from the OPEC announcement, and we're into the bottom end of the channel again. So a breach of the Bollinger Band bottom there, which is now sits at 61.50. So under the key 62 handle. You remember last week you were saying $62 was the floor for WTI, and 65 was the top. That was the channel you were in. So there was a lot of selling and buying at those extremes during September and August for that matter. So it's that sort of channel as well. But we're now bottom end again, but we've been down here before, so we'll see if the buyers regain control over the next few days as we start the new month. Obviously, demand in the winter time as we get into October, which starts tomorrow, obviously picks up quite significantly here in the Northern Hemisphere. So see where we go from here. But OPEC proselytations have moved us lower. So 62 remains our big support for WTI and Brent. We've got a similar sort of pattern, but at $66 and a top at around about the $69, $70 handle. Big round, significant. $70 is a little bit out top of the channel, but 69 was our top for the summer for Brent. And again, sideways, not a great deal of action or interest really as a trend following trader there. We are consolidating, but remember, longer the sideways action takes place, the more the reaction can be to the opening up. Obviously, some significant geopolitical announcement around Iran, Iraq, obviously the Israel-Hamas situation. Venezuela has become in the spotlight again recently. All big oil producers. And obviously the US itself and China also. So sideways action on the oil markets currently. Metals, gold trades at 3848. There is no holding it back. There's some significant reasons we've been bid significantly on gold, and another very strong day yesterday as we went through 3,800, and we now new all-time highs yet again for gold today. Just put that in the hourly chart. This morning we peaked at 3,875. All got a bit too much for the hourly traders. Lots of profit taken today, but it's just been bounced. It's just been bought back later today, hasn't it? So we're at 3,850, or shy of 3,850 for a single ounce, troy ounce of the precious metal that we all love, and that is gold. So 3,847 at the moment, and the trend remains very, very set. And try and short this, my friends, as I've said many times, at your peril. 3,700, 3,500. Our 20-day moving average now is approaching that 3,700 now, and we are now over the 3,800 level. If I put that there, let's put that in as a smaller number, because whether we'll hang on to it for any length of time, who knows? But the trend remains very set, and so I argue with it at your peril. When we have a big bid, a big buyers for oil, I say argue with it at your peril, but the trend is very, very set. We may see a test of the 3,700 level, certainly, but that has run. It's going to take some significant turnaround for this trend to be eaten backwards. But again, as we just seen on the oil market, the longer markets go sideways, as we did through that 3,350 level. That's why that dotted line's on there. During most of the summer here, this started in sort of the middle, at the end of the spring, middle of April, and we sort of pivoted around, weren't we? And once the break came, and it ran. So very, very strong 2025, as you can see here, beginning of the year. We are all the way down here at 2,600. It's had a very, very strong run and a nice steady sort of measured run. Sort of, it wasn't too steep. Got a bit volatile here in the shenanigans of the Independence Day or Liberation Day, and then we bought back very strongly, and then wasn't quite sure what was going on. And now that not the fear factor, but the safety bid on gold has continued. The geopolitical uncertainty has continued. Nothing's been resolved in any of these issues. The Russia, Ukraine, Israel, Hamas. They're all still ongoing. It gives a bid for oil, the uncertainty of US and China's relationship. All big central banks buying, the Russians, the Chinese, all buying gold, and so we've moved it higher, and now over 3,800. So that remains very much bid. So let's go back to the euro or the dollar crosses following that data dump from the United States. 117.40 now for the euro. So the euro's come back on that initial. Sorry, it's the daily chart. So it's up today. So it's come back on that initial move lower. Sorry, let's put the file where we were for the data coming out. So that initial move lower here at 3 o'clock has been bought back following the data from the PMIs earlier. The Chicago PMIs earlier, and euros moved up, so the dollar's weakened somewhat since the data, but it's sort of going to be back to where it was. So not really 5 minutes movement. It's much of a managing your positions into month end. That is smacking me off there. Smacks off, and we've had a very sanguine sort of September as well, sort of pivoting around over 117. Got as high as 119 during September. But really 117's been the pivot area we talked about. We were talking about here, a weakening again of the dollar to 120 didn't happen. We've come back under 117, and we're currently now back over 117, 117.35. So again, another sort of pivot area through that key 117 area for the euro during the month of September. See what the fourth and final quarter brings for the dollar. Just talking about the longer term, the Swiss franc has been one of the best performing currencies against the dollar this year. We see we started all the way up here at the beginning of January at 91.40, and we've been as low as recently as last week at 78.30. We've recovered a tad. Looked like we were going to move. The dollar was getting back on its feet against the Swiss franc as late as last Friday. It's cooled this week, but we're still just about hanging on to the 20-day moving average. So the franc is still very somewhat on the front foot. The breach here has been very weak. The weakness of the bodies of the candles. We have 2 strong days up, took us through the 20-day. But weakness is followed, so looking for some direction to start the new month. Swiss franc as well, but it's at this lower end, isn't it? It's 79.50, 79.60 compared to 81, 82, and even as high at the beginning of the year as we were at 91 plus. It's 91.60. So yeah, it's the buys of Swiss franc against the dollar very much in pocket this year. Yen 147.83, the sideways September action for the dollar. You can see here, I was waiting for some clear direction, but something is really going to change much, does it? The data is still a bit mixed. The expectation remains for 225 basis point cuts. We haven't had anything that's really going to swing it, take many markets off that view going forward. From the yen side, the chatter remains that they may start to look at moving rates, but we've had to see up, but in the opposite direction to everybody else. But we've had that for a while, and it disappeared earlier in the summer. We had that just this week as well over the weekend, and hence the dollar coming down against the yen. The yen's picked up this week, but we're still, back to, as you can see here, the flat 20-day, that average, under 148. And again, the bottom of the channel there at under 147, 146. And the low for September took us to 145, 50. So 146 is the key breach. And 147, bottom of the channel, to the downside for dollar yen traders. That's about it for today. We've got Trump speaking in half an hour's press conference. We're going to listen to. Well, it's not really a press conference, it's a statement, isn't it? I don't know why they say Trump. Well, it does. To be fair to the calendar, it says Trump speaks. I think it is a so-called press conference, but it's basically Trump telling his what he wants to be told, and the press asking him some very benign and non-intrusive questions. Because he's filtered out anybody that disagrees with him in the press room. Anyway. The leader of the German central bank might be a bit more interesting, but not really going to have much shakes on the euro movement. Tomorrow is, as I said earlier, is ADP day. It's more PMIs tomorrow, 1st of October. Holiday in many parts of the world. I know a lot of my colleagues in Cyprus celebrate October the 1st as a holiday as well. National Day in Hong Kong and China, you can see there. Interest rate announcement from the Indian Central Bank. Some PMIs, some European further European inflation following Germany's inflation rate today. See what that looks like. And ADP later on tomorrow will be live for that 52,000. Remember, ADP seems to be a bit more in line with non-farm payroll these days, given what happened over the last few months. And then later in the day, manufacturing PMIs from the United States as well. So quite a key day tomorrow as well, as we start, obviously being the start of the new month and the start of the fourth quarter. I've started my October account on the front foot. We haven't had very many trades. The second 2 weeks of September is my trade strategy. I don't know if you saw this last night, but that was from last Thursday. It was the last trades we had overnight. End of day basis. We're all losing trades. Got out on Friday before they got to the stop losses hit. It was running against us. Those are all sort of also trades. Remember the also ones? I checked first thing in the morning, see how they're running, and take them out. The Aussie yen, CAD yen, Euro dollar, and pound CAD all were losing trades last week. So we actually lost 72 points last week. It's the first losing week in a long time. It's 7th. Out of 39 weeks or 36 weeks, I think I've been posting the numbers this year. That was only our 7th losing week. It was only 72 points as well. That's how you want it to run. September was up 1,540 points. Obviously, some of that is index numbers, so take a little bit out of that. Still quite a lot of FX points, pips and points in there. So 3 winning weeks, a losing week. And for the quarter, we were up 3,833.5 points. July, August, September, all positive. Quieter August, as you might expect. And November might be the same going forward in the fourth quarter. I'm away for 2 weeks in November, so there won't be any trades on that. One new trade last night. We were short the guppy. It's already hit target 1. We closed half the position, so there's 28 points in the bag already, and our stop loss now is at 198.96. So let's have a look at that before we leave you. If that's still in the money, I did pull the stop loss down quite aggressively. That's all. JPY. There we go. I've lost my drawings thanks to this demo account on Trade Locker. But anyway, we are. Hang on, let's have a look. What did I say it was? I don't think we've been back there since I've been talking to you. We'd pulled the stop loss to 98.96, which is basically T1. What's that? It was 96. 98, 96, 20. So that's where our stop loss sits now on our trading account. So yeah, there we go. That's the last couple of hours. So we've moved up. Well, actually still moving down. That's our stop loss now, right on T1. So the minimum we can make on this trade is 55 points altogether. So we'll just forget about that and just keep checking it. If the trend continues to pull down, we'll pull the stop loss, trail the stop loss down after it as well. So as far as tonight's concerned, let's have a quick look over at my trading account. I've got potential Aussie dollar, CAD yen, Euro Oz, pound yen. Oh, that's interesting. Pound yen again on the more conservative system. This is the more aggressive system, so that's triggering forward as well. Oil positions as well, potentially. Aussie is a long, potentially strong day for the Aussie today, as we said on the back of the RBA. 66.23 looks like our entry for a target of 66.64. CAD yen, short position there. That's looking okay. Yeah, stop loss at about 70 pips. Initial target of 30 pips at 106.03 from 106.32. That's looking good. Euro Oz, we've had a few Euro Oz trades, haven't we, recently? That's looking. I'm going to big stop loss on that, 130 pip stop loss on that. But again, it's a big strong down day for the Euro Oz, targeted 176.74 from 177.26, 30, 50 pips on that one potentially. But I'll update you all the data later, and I'll probably be looking at some index trades as well, possibly later. So there we go. Final day of the month. How has your September been? Do let us know. Do stick it in here. How's your September trading going? Remember, guys, tomorrow, if you we got a competition on tomorrow. Where's it gone? I did post it the other day, didn't I? If you get put in for our competition first away. There we are, first away. Don't forget, Wednesday. 10K accounts giveaways tomorrow, the 1st of October. 10 winners, 10K accounts. To get a free entry, open an account today for September. Everyone that owns an account in September will get an entry into that to get a free account. So it's basically buy one, get one free, isn't it? And our 10K accounts are, either in that evaluation tab. You've got to one stop, the Express Challenge. 10K account allows you to trade the news. I know a lot of you like to trade the news. The 10K account, the Express One Step, is $85. If you're brand new to the proptrade.com, new 25 gets you a huge 25% discount off that $85. So you need just over $60 to have a $10,000 worth of equity to trade with. Open that today. You've got a chance of winning another one tomorrow. Somebody's got to win this. There's 10 of them to give away. So for $63, you get a $20,000 account potentially. One step. Say it allows you to trade the news. I know a lot of you like to do that. Also trade the weekend, the crypto trades. A 12% profit target is what we're asking for. 7% maximum loss, 4% daily loss. And then you've got your funded account. We've got daily loss of 5% there. Obviously, no target. It's up to you how you want to trade it. But you can, obviously, trade for 3 days. Any money you made after that 3 days, you get to keep 80% of it. Apply by the midnight on Thursday. You'll get your returns on Friday. We never fail to pay. If you're all, you're following the rules. So the rules are very, very clear, very, very straightforward. Don't try and be smart. Don't try and be clever. Just do it sensibly. Do it in a disciplined way. Do it, sensibly. And we're here to support you and here to help you, here to help the company grow, here to help you grow as traders and become bigger and better with us. 100,000 accounts are available and very good value as well. That allows you to trade bigger lot sizes, whether you want to stick to one particular asset or multiple assets. I'm a big multiple asset trader myself. I look at 40 or 50 assets, scan them every night, see what's available, and there's enough come up and enough winners. I keep the losers small, and you'd see the numbers I put up. I'm not making this up. I put these up, way before anything happened. So there's nothing dodgy about it at all. So come and give us a go. Okay, I'll see you all again tomorrow for the ADP numbers. If you've got any questions, please let me know. Join us on, say, the Discord group, and we're here to help you, my friends. Take care.